a unique program in its own as we inaugurated UAE India Capital Connect series. It is within a day a third program since morning we had. May I request Mr. Ramesh to come on podium and take the proceeding forward.
Thank you, Sahitya. This is a breathtaking view. Members of 10 organizations, Indian organizations coming together.
Salam.
Good evening, ladies and gentlemen. On behalf of IBPC Dubai, it is my sincere honor to welcome you all to this very special session of the UAE India Capital Connect series, our investment awareness evening in partnership with the Bombay Stock Exchange. When I say all, I mean members of IBPC, their spouses, members of ICAI, India Club, Indian Women in Dubai, IPF, Taxation Society, PIOCCI, GMBF, RBPG and GTO. That's 10 organizations in all. A big round of applause to all of you who have taken time out of your evening to come and attend this session. May I now request Amitava to play the video, please. This is a small clip on IBPC that you might like to see.
In the heart of Dubai, where ambition meets opportunity, stands a unique bridge between two nations and a powerful platform for ideas, innovation, and impact. This is IBPC Dubai, the Indian Business and Professional Council, a not-for-profit organization supported by Dubai Chambers and the official voice of the Indian business and professionals in the UAE. With a vibrant community of 600 plus members, IBPC is organized around 6 sector-specific focus groups, from finance to real estate, technology to healthcare, retail and more, each working actively to promote the sector and engage in policy advocacy that drives meaningful change. IBPC curates over 50 high-impact programs every year. Business breakfasts, ministerial visits, trade forums, networking nights, and cultural celebrations that reflect the richness of the Indian diaspora. Over 20,000 attendees walk through our doors each year to learn, collaborate, and grow. As IBPC grows, so does its mission to become more inclusive, more accessible, and more relevant to a new era of leaders. Our expanded membership structure welcomes women, youth, and startups with benefits tailored to engage, empower, and elevate. Behind this energy is a governance board and leadership team made up of accomplished professionals and entrepreneurs, leaders who have shaped the region's success stories and continue to mentor the next generation. From seasoned stalwarts to ambitious first-timers, IBPC is where business meets community, where heritage meets possibility, and where the future of Indian leadership in the UAE is being shaped every day. Are you part of the conversation yet?
That was IBPC. For us, there's one motto: onwards and upwards. The timing of this gathering could not be more significant. Just 40 days ago, we witnessed a historic moment. His Highness Sheikh Hamdan bin Mohammed bin Rashid Al Maktoum, the Crown Prince of Dubai, visited India and stood on the floor of the Bombay Stock Exchange, signaling a new era of trust and ambition in the economic partnership between our two nations. At IBPC, we recognize that while trade and diplomacy are crucial, the true engine of long-term collaboration lies in financial literacy, capital market access, and investor confidence. That is precisely why we have curated this evening. For business owners, professionals, individual investors, institutional participants, all of them based in the UAE, to better understand how India's capital markets can be a vehicle for their growth. We're privileged to have with us this evening a group of distinguished speakers and guests, and most notably, the leader of India's oldest and most respected stock exchange. For that matter, Asia's oldest stock exchange too. But before we move to that part of the evening, let me now invite our chairman to deliver his opening remarks. Please join me in welcoming Mr. Siddharth Balachandran, Chairman of IBPC Dubai.
Thank you, Ramesh. Honorable Consul General of India, my friend Satish Kumar Shivan, CEO and MD of BSE Limited, Mr. Sundaraman Ramamurthy, again my friend, Chairman Emeritus, governors, committee members, conveners of forums, co-conveners, my IBPC family, my extended Dubai family, a very good evening to all of you. Today is a intensely happy day for me individually, and a monumental day of achievement for IBPC Dubai. Why? One reason is, of course, the CG is here, ever smiling, ever supportive. Always good to have him. That is a reason for happiness. My friend, Mr. Ramamurthy, is here, calm, composed, knowledgeable, another reason for happiness. But I think the overarching reason for my happiness today and the sense of achievement that IBPC Dubai feels is the significant representation of 10 community associations here today. Truly, unity in diversity. I don't think this ideal has been manifested more clearly, at least in Dubai, with the Indian community. Long may this camaraderie continue. You know, this could not have been possible without the greatness of the United Arab Emirates. Today is a celebration of the UAE-India bilateral relationship, which has become a very intimate brotherhood. That is a celebration as well. However, I think all of us here today will agree that we are gathered here to celebrate India. We are gathered here to celebrate India's economic prowess. This has been symbolized, as most of us agree and would have witnessed it in many, many pictures earlier and even now, in a very powerful visual of the iconic Gigi Boy towers. Now, for those who may not be aware, Gigi Boy Towers is the official premise of the Bombay Stock Exchange. This visual, this powerful image, broadcasts a message to the entire world. A message that has transformed from the old image of a resilient India, a relevant India, to an imperative India. India is no longer an aspiration. India's success is no longer just an aspiration for India. It is in the interest of the world that India assumes its rightful place among the top 2 economies of the world by 2047. India is a force for good. And it is essential for India to fulfill its financial aspirations. 30 trillion by 2047. Now that's the goal. Seemingly insurmountable, but I disagree. I think if we work together like this, 30 trillion in 2045 is imminently achievable. Now, this powerful image of India forging ahead, crossing every obstacle, crossing every hindrance, is beginning to be noticed? No. The world waits in anticipation for India to reach its destination earlier than expected. Now, who better to give us the nuances of this transformation than the Consul General of India and the CEO and MD of Bombay Stock Exchange Limited. So before I transition from this stage and hand it over to them, before I conclude, I would like to invoke the higher power. God bless the UAE, God bless India, God bless all of you. Thank you.
Thank you, Mr. Balachandran, for that powerful and forward-looking address. Ladies and gentlemen, it is now my privilege to invite our chief guest this evening. Please welcome His Excellency Mr. Satish Sivan, Consul General of India to Dubai.
Thank you very much, Mr. Mahalingam. Thankfully, you didn't give an introduction about me and read out my CV to this group, like he keeps doing it all the time. Mr. Balachandran, Mr. Ramamurthy, and I don't know, friends across tables here. So, I was actually pleasantly surprised when I was walking in to see this union of the diverse community associations here in Dubai. This is an aspiration which me and Mr. Balachandran have been discussing for a while, that it is important for all these associations to come together because we have the same goal. It is important that all of us work together towards that goal, and what better day to do it when the MD and CEO of BSE is here. If there is one thing the whole of India can relate to is the iconic building, Jijabai Towers of Bombay Stock Exchange. And true to your reputation and potential, you have brought together the Indian community in Dubai also. So trust Bombay Stock Exchange to lead the way for the economic transformation of the country. I was just trying to look up on some data about Bombay Stock Exchange. The remarkable contribution that our capital markets are playing in our march towards Viksit Bharat is truly commendable. Today we are close to becoming a $5 trillion economy. The market capitalization of BSE is about $5 trillion. So it is rightly aligned with the national progress. And when we go to become a $30 trillion economy, I'm sure Bombay Stock Exchange will be leading the way, becoming a $30 trillion market capitalization. I'm sure. And this year I'm told that we are the leaders in global IPO offerings, contributing to about 22% of global IPO in the first quarter of 2025, and we have always been the leaders. One thing that I can relate to, and I would love to hear from Mr. Ramamurthy, is how our capital markets, Touchwood, has been able to weather the global geopolitical turbulences. I know that the markets have become a little bit more volatile than it used to be in the past. I'm sure all of you would have seen the iconic images of 1990s budget. The success or not so great budget would be reflected in the stock market behavior the next day, right? And there were one or two more occasions where the market would reflect the politics, if not the geopolitics. If one was the budget, the other was the change in government. Whenever governments used to change, the markets used to react. The elections would have some impact on the market. But today that is not the case. A firing of a missile by one country on another, not totally related directly to India, affects our capital markets. It is not even remotely connected to India, but such closely interlinked world is affecting how our fortune, our future is determined. So how does the powers that be handling and managing, including our regulatory authorities, the manner in which they are able to absorb the shock, global shock, is a matter of surprise and matter of amazement for a person like me. So I look forward, as much as everybody gathered here, to hear from you. When I looked at you, you looked a little bit tired, but then when Mr. Siddharth Balachandran told me that you are calm and composed, then I realized probably not because of the long day that you had. But even if it was a long day, we request your indulgence for another half an hour, so that the people gathered here are not disappointed and they are able to benefit from your wisdom and your knowledge. So thank you very much for bringing together the community in UAE. And thank you to my friends, brothers and sisters across associations for their presence here today. I would hope that ICAI or IPF or RPBG or any other entity, when they take the lead, they would be inviting other associations. So it should, in the days going forward, should be a combined community initiative, particularly on economic aspects. So at this point, before I hand over the floor to Mr. Ramamurthy, let me also request to him, and I had just clarified with him, that I'm not talking about India-UAE bilateral relationship. We all know what's happening. But one surprising thing for me, which I learned from Mr. Ramamurthy, is that we don't have institutional engagement with UAE capital markets, Dubai Financial, DFM. So I hope that one blip is corrected, and probably your visit will lay the path for that. So thank you very much. Have a wonderful evening.
Thank you, Your Excellency, for your inspiring words and unwavering support in deepening the India-UAE economic corridor. Your last example, I am sure, is being worked upon. Let me not get any secrets out of the bag too soon. And of course, your unwavering support in helping all of us deepen our pockets. Friends, I don't know if people at the front realized, but people have been streaming in. Many more tables and chairs have been occupied since we started the event. Yeah, that's a good sign. There are a few more, and hopefully the traffic has not been so bad. We need to see a house full. We're slightly short of that. Friends, we now arrive at the highlight of this evening. It is my privilege to introduce to you Mr. Sundararaman Ramamurthy, Managing Director and CEO of the Bombay Stock Exchange. Mr. Ramamurthy joined BSE in January 2023 and has since led the exchange through a transformative process, driving strategic growth, product innovation, regulatory engagement, and investor outreach. That last element is happening as we speak, is one of the many. Prior to BSE, he served as MD and COO of Bank of America's Indian arm and spent 2 decades at NSE, where he was pivotal in the evolution of India's derivatives, index, and clearing businesses. He began his career with IDBI, SBI, and Indian Overseas Bank. A cost accountant and banker, he was recently named Outstanding CEO of the Year and Asia Business Leader of the Year 2023. Big round of applause for that. Please join me in welcoming Mr. Sundararaman Ramamurthy for his keynote address.
His Excellency the Consul General, the organizers of this event, IBPC, and all the other association, specifically Balchandranji and Mahalingamji and Chaturvediji. Pranam, Namaskar, good evening. When the CG said that I have been responsible for the joining of all the 10 associations, I remembered a story. There was a joint family where the house jewelry was housed in a box. The box was, of course, having a lock and key. The key was very much available in the household. Probably it was COVID time, so nobody was going out. So one day they decided they should open the box to see what is inside. People who have lived in joint families in India will know it will be a big group of all age. Everybody gathered in the hall. The key was ceremoniously brought in. The head of the family tried his level best to open. It didn't open. Everybody tried their hand. It did not open. It is the right key, right box, not opening. After some time, they all got tired, switched on the AC and sat down. A very small kid, which was observing all this, the kid thought, maybe it's some game, Everybody has to come, take the key, put it in the hole, try it, and then go and lie down. That's what the kid thought. The kid took the key and tried. Lo and behold, the box opened. Was it the kid which opened the box? Same thing with me. This was waiting to happen. I am Nimitta Matra. We talked about the iconic building, which was briefly shown on the screen as well. This building has a history like many other things. Stocks are born first, then come stock dealers who call themselves as brokers. Then an association called stock exchange gets formed. And then the regulations come in because they want to regulate themselves. And then a regulator is born. Same process happened in India as well. Indian markets had shares trading somewhere in 1800 onwards. How do you know? There are newspaper cuttings also available, which talks about people advertising that they would like to sell their shares because there was no stock exchange. A few people joined together near this building which you are seeing. That place is called as Horniman Circle. And under a banyan tree, they started buying and selling shares. Here is a very important point to note. What they were doing? Buying and selling shares. For whom? Of course, for themselves. The purpose of they joining together had a very limited purport. It is for buying and selling of shares for themselves or people who have approached them. Why am I emphasizing it? You will know soon. Then it went in the trajectory and stock exchange was born. 1875, Native Share and Stock Brokers Association was formed and called itself as Bombay Stock Exchange. In 1957, in Republic India, we became the first recognized stock exchange of Republic India. With 1956 SCRA, Securities Contract Regulation Act, as the base with which this regulation came. 1992 regulators were born, on and on. Then this building was constructed by demolishing an existing building. This building used to have what is called as a ring. We have heard a ring in circus also, right? There will be a ringmaster there and there will be chaos. In stock exchange rings also there used to be chaos and there used to be ringmasters. The purpose still was buying and selling securities for themselves and their clients. Lot many changes happened. We had 2 hours trading, around 18 mutual funds, no foreign participants, around 7,500 securities listed in exchanges, much more than what it is today. Most of them illiquid, most of them prone to manipulation. Purpose, same. Nothing changed. If you want to grow, a necessity was felt for growth in 1992 for various reasons. This cannot be the way. Paradigms have to change. The paradigm changed, and from a ring, it became an electronic platform of trading. Earlier on, because the purpose was only to buy and sell securities for themselves and their client, they prevented entry of anybody else there. Entry to become a stockbroker was restricted. But that purpose was changed in 1992. Necessity is the mother of invention. In 1992, when the stock exchange reforms happened, the purpose is not for somebody buying and selling. It is for capital formation. It is for economic development. It is for liquidity creation. It is for employment generation. It is for wealth creation. It is for building trust. People did not have a trust in stock trading because they never knew what is the price at which it was sold when they offered the shares to sell. They did not know what is the actual price at which it was bought when they wanted to buy. End of the day, there used to be a paper printed for 2 rupees and sold near a railway station in Bombay called Churchgate for 2 rupees. We used to call it as Bhav copy. It used to have the prices of all the stock. It will have open, high, low, close. Invariably, If you're an investor who wanted to sell your shares, you will find your shares are sold at the low price. And if you wanted to buy, it was bought on the high price. When you buy or sell, you should get shares or money. When will you get? Yeah, you will get. When? You will get. When it happens, it will happen. We used to call it as T plus anything if at all it happens. That was okay when the purpose was buying and selling for a few people. That is not okay when the purpose is economic development. Paradigm changed. Totally digitalized. Today, the place where trading used to happen in BSc is a big hall. We call it as a convention hall. We host people there to do programs. What has happened? Democratization of access to capital markets. Along with that, the regulation stipulated that since prices are nothing but embodiment of information associated with the stock, if somebody should know what the price is, they should know the information. Information cannot be differentially distributed. All and sundry, big or small, have equal access to information. Everybody should get to know the same information at same point of time. Size does not matter. That's what is the corporate governance, and BSc started displaying corporate information, again digital forms, to all and sundry. Democratization of access to information, democratization of access to market. The whole paradigm changed. Today, you have longer trading hours. Around 1 lakh crores gets traded in cash market. In equity derivatives market, the premium that gets traded on any day is around 70,000, 80,000 crores. The number of investors participating in the Indian markets, the UCCs, unique client codes, is around 200 million. The unique people trading is more than 110 million. The number of people who are having, this number of mutual funds have increased to 46. The number of mutual fund distributors has become innumerable. The number of mutual fund investors in India, the folios, 200 million plus. There are around 11,000 FPIs participating in Indian markets. What has happened? As the CG observed, India had last year the largest number of IPOs and second largest in terms of value. Capital formation. When capital forms, employment generation, general well-being. The beauty of it is, when employment gets generated, consumption improves. When consumption improves, all of us know GDP improves. Savings, investments. In the last 5 years, the number of investors have gone from 5 crores to 20 crores. The beauty of this 15 crores extra is, these are all not from Tier 1 and Tier 2 cities. Around 70% plus of this is from non-top 30 cities. Under the leadership of the current Prime Minister Narendra Modi ji, the number of people having bank accounts has gone up. Today everybody has an identity called Aadhaar card, and payments have become easier. Let us assume I have an account with HDFC Bank and my colleague has an account with, say, ICICI Bank. While talking to you, I can just, without even seeing, make some clicks and transfer money from my account into my colleague's account. Believe me, it will get credited and he can spend also. The point is, money has not yet exchanged between HDFC Bank and ICICI Bank. It happens later. Greatness of UPI. Innumerable number of apps where retail participants can log in after doing proper KYC and start trading. Yes, India has arrived. It's the fifth largest economy, moving towards becoming even bigger. It is one of the consumption capitals of the world. What it produces, it can consume even without much dependence of markets. Our Consul General was making a point. How do you manage when there are geopolitical situations which generally creates volatility and turbulence? The morning I was mentioning, in turbulent waters, smaller boats jump up and down, may get toppled. Larger ships still maintain stability. India is no longer a banana boat. It has become a very big ship which can face turbulence with its own dignity. The diversity of people participating in Indian markets, the depth of Indian markets, all contributes to its stability, its consumption capability, the domestic institutional investors in India ready to take up in case the foreign institutional investors want to exit, their portion of their selling brings in greater stability. When I was much younger and used to work for National Stock Exchange, if FPIs catch a cold, Indian markets used to shiver with fever. No longer. People come and go. All types of participants will come and go. It's at their will they should come. It's at their will they should go. But that should not impact market, and it does not, because domestic institutional investor with a sizable, basically insurance companies and mutual funds, with a sizable portfolio for them to handle, are able to absorb shocks. That's the greatness of India today. It is fastest growing economy. It's one of the fastest growing economies of the world. It has returned a CAGR of 15% in the last 25 years. Last 25 years, Indian economy has grown 100 times. The number of investors have grown 100 times. For 2047, we may not have 25 years, we have 22 years. Even if we don't grow 100 times, I'm sure we will go to 30 trillion to 40 trillion. CG made a wonderful comment which brought in the relationship between market cap and GDP. In developed economies, the ratio of market cap to GDP is more than 1. Even in India, it is more than 1. Marginally, when we develop, if market cap to GDP were to gather pace, what should happen to market cap? If you are talking of a GDP of 30 trillion, we should be easily thinking about a market cap of 40 trillion. Will it happen on its own? If we were to sing, sit and rejoice that it will happen, will it automatically happen? There is no free lunch. Nothing happens automatically. In Sanskrit we say, Udyoginam Purusha Simham Upaiti Lakshmi. Daivena Deyamiti Kapurusha Vadanti. Daivam Nihatya Kuru Paurusham Atma Shaktya. Yatne Krite Yedina Labhyati Kotra Doshaha. It says, Udyoginam Purusha Simham. A man lion. There is no gender bias. It's a way of saying. Udyoginam, industrious. Upaiti Lakshmi. Lakshmi is wealth, not the next door neighbor. Wealth goes to the person who is industrious. Daivena deyamiti kapurusha vadanti. Only cowards tell that they didn't have luck. I tried my best. I didn't have luck. That bugger is useless, you know. He is today where he is just because of his luck. No, there is no luck. Daivam nihatya, kill that luck first. Kuru paurusham atma shaktya. With your self-confidence, do hard work. Yatne krite, when you really work, yadina siddhyati. Still if you don't get, kotra doshaha. Just go and see what is the root cause of the failure. Kaha atra doshaha. What thing went wrong because of which, despite your hard work, you did not get it. You do root cause analysis, you will get the reason, you will address it. Means what? You will be successful if you do hard work. So we all need to do hard work if India should reach the destination, what we are aspiring. But the hard work will be different for different people. What will be the expectation from the people, great people gathered here? You also have a great capability to contribute to this nation's success, growth, economic development. Think of it. When the economy develops, how many people get jobs? For every person who gets a job, you are feeding 5 mouths. Don't you think that is the best thing that you can do to any economy? By contributing to its success, and this help needy stomachs get food. It's one of the most noble acts every one of us can do. You people are one of the most important people who are going to contribute to India's economic growth. It is estimated there are around 16 million NRIs spread across the globe. A significantly large portion of it, around 3.5 million NRIs, that's what, 4 million, I stand corrected. 4.2. 4.36. I stand corrected. I have stale data. 4.36 million Indians are in this good place. You all make great remittances to India, which is very helpful. It is also studied that only 15% of the total money earned by NRI go to India as remittances. Remaining 85%, some you will be consuming, some you will be investing. Our humble submission to you is, whatever you invest, please have India in your mind. And BSE is a gateway through which you can invest into India. Every penny counts. Every dollar that you invest, please understand, it's not just for you making money. That is actually incidental. You are contributing to the growth of an economy. That's the main purpose. The exchange which I represent, is it geared up for managing the type of flow which we are talking if it were to come? Will that be possible for us to handle so much of volume and so much of growth? Where all the probable areas are for growth? Well, no longer stock exchanges or under the banyan tree stuff. They're all fintech companies. The backbone is technology. The number of orders that we process are mind-boggling. A mention was made about the turnaround of BSE in 2 years. 2 years before, the order processing capability of BSE was a mere 100 crore order messages per day. Just in 2 years, we had increased it to 1800 crore orders per day. From nowhere, my capacity today is 14 lakh order messages per second. We are planning to increase it to 20 lakh order messages per second soon. If we had not done that, the derivatives growth which you are seeing in the last 2 years would have been impossible. And today, nobody trades just by sitting in their office, making a phone call and all that stuff. New type of participants have emerged in the market. Algorithmic traders, some of them are called as quants. They use mathematics and find relationships, and based on the relationships, when the equilibrium is away, they trade to benefit from disequilibrium, and in the process render an economic service of bringing back equilibrium. And there are high frequency traders. They pump in a lot of orders. And there are retail participants. Every one of them have different aspirations from the same market. The same market looks very different for different types of people. You need to cater to all the needs, then only you exist. So as stock exchange, if we have to cater to all the needs of all these people, we need to have a wonderful and strong data center. 2 years before, we did not have any meaningful number of racks. Racks are places where, within the co-located space in the office of BSC, which we call as data center, people put their own servers which has the algorithm and it trades. Because of the nearness to the matching server, it does not suffer latency. Latency gets measured no longer in seconds, not even in milliseconds. It is microseconds and nanoseconds. World has become really fast. Time has acquired a very different meaning. We are geared up today with already 300 such racks, from nowhere to 300 racks in just 2 years, and we have plans to increase it to 500 before the end of this financial year. Will it all not require substantial investments? Of course, yes. But if you don't invest, you don't reap benefits. And when you invest, you should be cautious to implement it in time. That's what we have done. We have already reaped the benefits. If you have seen the balance sheet of BSC last year ending March 31st, 2025, you would have seen the last 2 years, every quarter was a record quarter. And for the first time, we have touched around 3,200 crores as the top line, with a hefty profit margin of around 50+%, having around 11,020 crores as the net profit. The money spent on technology already recovered. You have to invest, and we are investing. Picture abhi baki hai. Ye bas shuruaat. This is just the beginning. We have more plans for infrastructure creation. We are well geared up for taking this increased activity. Sensex, as I mentioned, traditionally has returned to you 16% returns per annum on a CAGR basis, compared to gold of 9.3, silver 8.7, S&P 500 8.5, our good old PPF giving 8.8. It is a good place to put your money. Where do we see the growth drivers within BSE and what we are doing for it? Mutual fund is an area where we feel there is a growth driver. Why? When more and more new investors are coming, it's better they cut their teeth in the capital market with mutual fund, because mutual fund by nature offers a wonderfully diversified larger portfolio for smaller sums of rupees as investment, with lesser cost associated with the management being added. Inherent advantage. The problem would lie in choosing the right mutual fund and right scheme. We try to educate new investors going for index funds or large cap funds. Cut your teeth, understand what is happening, then come to the market. So we are spending a lot of money on promoting mutual fund schemes through what we have called as Star MF platform, which has a market share of 90% and which caters to the 70% SIP, incremental SIP in India. It's a very big platform today. We are bringing in a new version. I have spent 20 crores on it. We are bringing it mutual fund version 2. It's already released on a beta version basis. Slowly we are incorporating members before we sunset the previous version. We feel it will be a game changer. Index business is a big business. BSE had a 50% partnership with S&P in a company called AIPL, Asia Index Providers Limited, in order to have a better management capability. We have bought it over from S&P last May 2024. Another gearing up for a resilient and growing India. Believe me, it's already doing wonderfully well in terms of top line. We have introduced, as of today, 25 new indices. In the morning when I spoke, I said 20. During the course of the day, we are introducing 5 indices. All of them have takers. So we do custom make indices apart from the Sensexes of the world, which are generic. We custom make indices to suit the needs of mutual funds and insurance companies. Third is another important area where we are doing some good work. Small and medium enterprises. There are 6 crore small and medium enterprises in India, but just 1,000 of them are listed. 6 crore ना सही, 60 लाख ना सही, 6 लाख ना सही, 6,000 तो होना चाहिए. At least 6,000 should get listed. So we are trying to ensure that good SMEs come into the market for the purposes of getting listed. In SMEs, there is an inherent problem. One understanding of SME is small and medium enterprises. Another understanding is subject matter expert, right? Most of the SME people, they are also SMEs the other way, subject matter experts. They know their business. They do not know accounting. They may not know finance. They may not know corporate governance. So in the process, when they come for listing, some of them look as bad apple while they are not. And when there is a good thing happening, there will always be bad people. There will be some bad apples. So if you get to see news that there is some SME company which had a bad promoter, it ran away with money, take it with a pinch of salt. We are not permitting all and sundry to trade. Retail investors are not permitted into SME. Minimum investment is 2 lakhs. However much we can try to safeguard anybody from investing into bad scripts, if you don't want to safeguard yourself, nobody can safeguard you. Atmanam atmana yastu raksheyuhu taha surakshitaha. So we have to make efforts from both sides. Please invest in good SME companies, as big funds if you have. We have to make more SMEs get listed. They have to grow big. They generate huge amount of employment. They are responsible for more than 40-45% of exports. They are into a big way contributing to the GDP of this country. That is another important area. One another area where we are yet to set feet and where we can is family offices. This term was never heard of probably a decade before in any big fashion. They are growing in big way. There are a lot of family offices in UAE set up from various parts of the world and coming here to trade. How can we all jointly help in all those family offices, considering India as one of the important destinations for them to put their family wealth? If Sensex can return 16% CAGR with highly reduced levels of risk, and when there are so many opportunities available as SME and other startups in India and unicorns in India, which all require funds and people who are ready to fund a risky venture, why we should not think of this? There, clearly your support, apart from diverting some portion of your 85% into Indian markets, how you can help in family offices could be very important. As I said, we are fully geared up. We are growing from nowhere as far as derivatives 2 years before. Today, we have 500 brokers trading, 8 lakh investors trading, and around 250 FPAs already in 500 racks, and on expiry days touching a premium of around 50,000 US dollars, 50,000 billion US dollars. Sorry, no, 50,000 crores US dollars. 50,000 crores US dollars. The average daily premium ranges somewhere around 2 billion US dollars. This is a US dollar number. We are here to support the growth of Indian economy. We are ready to work very hard and leave no stones unturned as a good citizen of India to promote trade, development and growth of India. You have a dual responsibility. Your prosperity comes from the place where you are living in. You should support, therefore, the relationship between this place where you are making your living and the place which gave you the identity. So let us hope for wonderful relationships between Indian markets and all of you, which can result in betterment of all our lives, lot of satisfaction that we are contributing for the growth of Indian economy and wealth creation, employment generation, and above all, trust. Trust is the most important result of all this. I would not like to exceed the time that is given to me. It is 7:30. I hope you found it useful. I want to once again thank the organizers for giving me this opportunity. It was a casual talk I had with Balchandranji, and he was kind enough to take it extremely seriously and make this happen. Pranam to every one of you, and thank you for this opportunity.
A bigger round of applause, please. Thank you, Mr. Ramurthy. Please stay on stage. We'll have a Q&A session now. Thank you for those thought-provoking and richly insightful notes, laden with the wisdom of the ages. Now we open the floor for the Q&A session. If you have a question, please put your hand up and one of our volunteers will reach a mic to you. We'll start with Mr. Suresh Kumar, the former Chairman and now Chairman Emeritus of IBPC.
Thank you, Mr. Sundaram, for an excellent introduction to BSc, which frankly to this audience, we don't really need an introduction, but I think some of the insights that you gave were very, very insightful, is what I can say. My question relates to your fellow stock exchange, namely National Stock Exchange. So what are the differentiators? What are their strengths? What are the challenges that you face vis-a-vis them? You started off as a mutual in a sense of the term, whereas they started off as a private company that then is still now trying to go public. So apart from those obvious differentiators, can you give some insights? And I also want to touch on the second aspect, which is what the CG mentioned about reaching out and forging a relationship with the stock exchanges here in the UAE. So in the UAE, we have 3 stock exchanges, in fact, 2 in Dubai, 1 in the DIFC and 1 onshore. And we have 1 in Abu Dhabi, ADGM. More recently, we have had a regulator for the stock exchanges and indeed for all non-banking activities here, non-banking financial activities. So, there has been an attempt, as I was mentioning to you earlier during the conversation, during the time of Dr. Patil, when he actually visited here, and I had invited him and connected up. Unfortunately, there was no follow-through on those initiatives. So, is there a new perspective that you have on that? So, it's a dual question.
On NSE's listing, I will not have any comment because I wouldn't know, honestly. I tell this to my employees. Today, whatever you do, you need to market it. That's the norm of the day. And beware, you are in no way different from a FMCG salesman. What is the great difference between selling a paste and selling a stock exchange? There are as many pastes as possible. Everything basically has one purpose of cleaning the teeth. Different flavors come out. So to that extent, people try to differentiate. So one paste can easily compete with another paste and throw it out of gear. No longer it is just 2 exchanges of India. Today, if you were to call it as competition, it is global. There is a capability for monies to flow from one economy to the other for the purposes of investment, and the barriers are coming down. So it is very important for you to differentiate yourself either in terms of product or in terms of services or in terms of both. I'm yet to come out with it. Probably the third one is governance. Because we are market infrastructure intermediaries. So how we try to differentiate ourselves is, we have certain exclusively listed stocks. There we are different. Common stocks are available in both the exchanges. We have exclusive derivatives product, which today only trade in the respective exchange. That is another differentiation. Service levels can be different and governance levels can be different. Without commenting it is bad or good anywhere, what I should aspire for is my service should be the best. My governance should be the best. Because against whom I should benchmark myself? Against myself. Because I am in the journey of becoming better, so I should be asking a question. I was X yesterday, today am I X plus delta X or no? If not, what is the purpose of my existence? So that is the philosophy with which we run, and that is clearly what has helped us to grow fast. As far as the relationship between exchanges are concerned, there are multiple types of relationship exist between different exchanges as we see. Some of them share products, some of them share connectivity, some of them do dual listings. Today a time has come, or some of them provide you technology, like for example Eurex has provided us the technology, and probably we are a unique exchange where for the first time Eurex has sold the source code to us. So we have our source code. That's why though my version is 10 generations old, I manage 20 times the traffic because I'm able to make changes to the source code as I wish and make improvisation. So the time has now come for a bigger pipe between Dubai markets and Indian markets. The plan that I have in mind, while I'll not be able to discuss it in great detail, at the right time with right people we have to take it forward. We will take the help of Balchandran ji and the Consul General on this. Every one of us will be able to contribute through that relationship for the betterment of both countries. So there are certain thought processes, so it will be taken forward soon.
Thank you, Mr. Ramamurthy. Great presentation. This is Rishi Chawla. I am the Vice Chairman of ICI Dubai chapter. My question to you is, I'm just was thinking, of course I'm investing into India, but one of the area when we sit outside and think is, the currency which we deal. Like dirham is pegged with dollar, and whereas INR continues to depreciate, right? So though we gain on the currency, though we gain on the stocks, but we lose on the currency because of depreciating nature. Now we have GIFT City in India, which has US dollar products. So do you in BSE plan to launch any kind of dollar denominated kind of products or something of, that will be interesting to know. Thank you.
In fact, we have a lot of dollar denominated products there. A few months before, I have introduced Sensex derivatives, dollar denominated, in GIFT City, in my own exchange there. It takes time to get traction into GIFT City because any international financial center has its own initial gestation period, typically which is long. You are right, Indian rupee is not convertible at this stage, and also there are currency fluctuations. The percentage erosion arising out of currency fluctuation, from a layman's perspective, as I see, is coming down. So to that extent, the currency loss, if I may call, is getting more and more controlled because there is some amount of stability in the direction of what rupee takes against all currencies. But sometimes it becomes out of our control because it's a macroeconomic number which has multiple repercussions. But by and large, you can presume, correct me if I'm wrong, a 2% to 3% erosion as max. If you're having a market which returns you on a CAGR basis 16%, and in good years goes to 22-23%, and even after consuming this part of the erosion, if you were to calculate the operational cost, everything, still net, you may be better off in investing in India than in multiple other markets in terms of returns alone. But what you can certainly say, and you should say and you will say, is ease of getting in and getting out has its own challenges that creates a trouble. That's the topmost priority of Indian markets. We are also thinking of how to make it easier for people to get in and get out. We understand all this NRI, NRE, NRO, PIN, everything we understand. Clearly, therefore, we are also at it. We try to simplify, but democracy takes some time for it to percolate to the last end. We are at it, we promise you on that. And certainly, you have a better return, so you should consider India. And Gift City, we are in a big way promoting. In fact, some of the thought processes which I mentioned a few milliseconds before is hovering around Gift City. If those were to happen, you should have a seamless capability to trade India sitting wherever you are in the currency that you want to trade. That's the aspiration we also have for you. Hope I answered your question.
Thank you, sir. I can see a hand go up there. I'll get to you in 1 second. Is there a lady that would like to ask a question? Mr. Ramurthy mentioned there is no gender bias here, and we're trying to live up to it.
Hi, sir. Well, I didn't realize before taking the mic that I'll be nervous suddenly. Sorry if I fumble. I'm Shivani Deshpande. I'm a proud member of the IWD community, so thank you IWD for bringing us to this event. So to get a chance to interact with you itself is quite overwhelming. Thank you so much for sharing all the insights on stage. This question is coming from someone who has chosen entrepreneurship very recently. And I'm still in the middle of putting the entrepreneurial puzzle together. Now, one of the pieces that I'm trying to put together is to know my finances and how to be financially independent. So my question to you would be that what are the most practical first steps a woman can take to start participating in the capital markets so we can eventually be financially independent and we can start contributing to the Indian economy and investors community?
Thank you for the question. There is no gender bias. There is no separate route for women and there is no separate route for men. Whatever you want to do as investment, my golden principle which I tell is this: trade what you understand, understand what you trade. For understanding, knowledge is available everywhere. Are you ready to put in efforts to know what it is? I tell the students, which I told today as well, all the students and even somewhat grown-up people have a fascination for mobile phones. When a new Apple version comes, how much of effort we put across to find out what is new in this version, right? And whether Redmi is better or this is better, what is the pixel of the camera, what all I can do. So many questions we get answers by doing our own research. Or if you go to the Google, it tells you a lot about small videos and what new iPhone has to offer. Same way, there are a lot of videos, lot of information material on stock market. You should put in efforts to study them. Whichever appeals to you as simple, you should read and understand. But it should be on fundamentals of market and fundamentals of investing. It should not be telling you which stock you should buy and which stock you should sell. Anything that tells you what you buy, what you sell, discard it. It is you who decide what you want to buy. It is you who decide what you have to sell. My shirt will not fit my neighbor, not even my brother if I had one, right? Then if my shirt also not fits, how my investment strategy can fit? Your investment strategy is yours. So for that, you need to develop knowledge. So please read small things so that you can equip yourself. Mutual fund could be a good route. Do analysis of the mutual fund schemes. Go for a large cap scheme. Try to find out what the fund manager is doing, which scripts he has invested, why it is in line with the theme that he is professing, that he is following, when he buys and when he sells, why the shares percentages change, what could have been the trigger point? Curiosity. Once we have that, we will get to the bottom of it.
Thank you so much, sir. Thank you.
Thank you. Can you pass the mic to the gentleman to the right of Shivani, please?
Good evening, sir. I hope Dubai is treating you well. Thank you, Siddharth, sir, once again for bringing him here. He's a very important person. Your company is the darling of India Stock Exchange. Okay. So BSE, I'm sure everybody knows. I was just checking the website in 2010 or 11 when some of the pre-IPO investors invested. The price was 100 rupees, and today it is 8,000 rupees, touching plus and minus after so many bonuses and splits and all. So I don't know. Maybe so people to know. In the last 20 years, this company has given more than 50, 60 times returns. Okay, and our dear friend Siddharth Balachandran, he is the single largest shareholder of BSE. We are privileged to have him here also. So, a little bit about myself, sir. I'm a chartered accountant, certified public accountant. My name is Piyush Junjunwala. I'm nowhere related to Rakesh Junjunwala, just for your knowledge. And I was a British multinational slave till 20 years, and then decided last 3 years ago that, okay, I'm done with British multinational slavery, and I'm going to be focusing on India. I run a small advisory firm called Stockify. Nothing fancy. I copied the name from Spotify. One of my friends, probably Anand, is here. He gave me that name. Okay, so thanks to him. We are working on unlisted shares in India. So my question to you is that there are 7,500 companies which are listed in India between BSE and NSE. Okay, probably BSE has a larger share in terms of number of companies. NSE would have 3,000 to 4,000. So, and there are 2 million companies which are not listed in India. Okay, so there is a huge opportunity to have a actually private exchange or something similar like BSE and NSE, because with coming to a stock exchange comes with a lot of regulatory requirements, a lot of reportings and all, which small companies won't want to do, but they still want to raise capitals, probably in a different way. So what is your take on that?
So let me split the question and put it differently. You were talking about a private stock exchange. If it is a private stock exchange, then it will not fulfill the purpose of getting listed and traded. So then what you are talking about is how a person who is an entity, who is a corporate entity, if he is not listed, is there any way in which you can facilitate him raising funds? That's what I'll put it across as. One is, if he is ready to come as a SME into the SME exchange, we are facilitating. This experiment began, but it has not become an avalanche yet. As I told, just 1,000 companies, while there are 6 crore companies which are SMEs. There are platforms in India which look into private funding of startups. That's what we hear. In fact, many of the family offices, when they want to put their money into startups, use these type of platforms. But is there any organized effort till date to provide a meaningful platform, not more as a business, but more as an economic development activity? The answer is no, not yet. That is one another area which we are looking at as to how we can facilitate. The starting point of it is what is the family offices. That's what I mentioned. Why? Significantly large portion of the family offices funds, we are told, from whatever analysis we have, we don't have access to the conglomerations of family offices where they have events. We have never attended one. I don't even know whether they will take us in, because we are a stock exchange. Though we would love to and see what best we can do to save them and serve them. I'm told that they put a lot of money on startups. If we were to help them in providing a platform where they are able to get a referenced startup on a confidential basis where they can think about investing. That could be a service. There are lots of opportunities and lots of thought processes. Time is the constraint at this point of time. Hopefully, this will also happen. It may not happen as a private stock exchange because the statutes of India do not permit the existence of any private stock exchange.
We have a question from this side of the room. Mr. Karthik Raman.
Thank you, Ramesh. Thank you very much for being here, sir. Thank you for your thought-provoking, insights on the subject. Thank you. My name is Karthik Raman. I'm from IDPC. I work in the tech and the telecom space. My question to you, sir, is what is BSC's perspective on supporting crypto-based assets, especially from a regulatory landscape? And will we ever see a correlation between Bitcoin and Sensex?
See, the first question is very easy to answer. Second question is, the answer is I don't know. Being very honest. We are regulated agencies. So typically our role is to make anything that is regulatorily permitted to be traded by the people with as much transparency as it should have. At this point of time, crypto is not a regulated underlying in India. Some crypto derivative exchanges have come telling that they are regulated in some fashion whatsoever. How much it will stand the test of time, we don't know. Unlike many other countries, the purpose of institutions like us in India is slightly different. The tone gets set in the preamble of SEBI Act, which tells the genesis, raison d'etre, the purpose of any organization. It says to protect the interest of investors, and then only it talks about development and regulation. I'm told when this act was promulgated, when it went for presidential assent as an act, it was to develop the capital markets, protect the interest of investors and regulate. That's how it was. I'm told, I don't know, I'm not seeing that President circled it and brought the investors, protect the interest of investors to the front. So wherever we feel that any underlying could not result in proper protection of investors' interest, we get worried. At this point of time, crypto is one which is going through that phase in multiple parts of the world. So it's very unclear for me to tell you whether there are any timelines, when it will get regulated in India and whether we will have it. But what I can tell you is, the day it is a regulated product, it will not be too much of a time for us to introduce, because the software and the hardware and the interfaces that we have are conducive for introducing any asset class for trading.
Thank you. Mr. Warren?
Heard you, such a composed answering. The way you spoke on the stage was absolutely class. I think very rare to listen to somebody who could speak with so many pauses but continue to take the right direction. Great. I have a very simple question which probably I had put it up about 6 months back when I was in India with you, and I just want to get across to you that we have America. In America we have got ADRs listed. So if there is any plan for UAE, DFM or ADGM to have Indian scripts listed here, if that happens, actually there'll be a huge money which will flow into Indian scripts, because the whole of African market whole of Middle Eastern people. They all love India, but they really don't know how to get to the Indian stock market. So this could act, because you have only about 11,000 FPIs, as you mentioned, and I know a few of the FPIs from Turkmenistan and other places who have invested in the Indian markets. But this can actually bring in a lot of wealth into the Indian market. So I just want to know if you have any ideas on this.
See, if the ultimate goal is people who want to trade in India should have a dollar-denominated trading venue, that is what is going to be served by UAE. No, sorry, Gift City. For a company to go and raise capital in any other market so that others can trade will work only if the company has a need to raise foreign capital and ready to do all the listing requirements of a different jurisdiction. That will be leaving it to the prerogative of every individual company, which therefore will take a longer time to materialize and may not materialize. Because if there is a substantial amount of money in any case available within in India to raise, and foreign currency is not that difficult to get for conversion for any import purposes, then it will not be a very easy proposition to make corporates to go and list in foreign exchanges. Instead, the route India is following is this, which I call as the outside-in route. India is opening up when we say what it means actually is anybody outside India should have a capability to come into India, invest in India and trade in India. We have facilitated it through the FPI process and FDI process, but we are an ID market. Ideologically, we have problems in not knowing who the ultimate investor is. The ultimate beneficial owner concept brings in with it a lot of challenges for multiple people. So the jurisdiction in India per se as mainland may or may not be able to wave it away in the near future. But a simplified regulatory regime, that is why has been brought into the Gift City. I am not sure how many of you are aware, any individual who wants to trade Indian markets can become a remote trading member. He need not even have an office in India. He can trade Gift City by becoming a remote trading member. The government is really doing a lot to facilitate, but there is some distance to cover it. So this outside in is taken up seriously, and we are planning to materialize that dream using Gift City. Anybody can become a remote trading member. If you are interested, connect with me. You already have my coordinates. More than happy to guide. Either me or Anand, you can coordinate.
I'm Dr. Sridhar Devara. I'm an entrepreneur and a leadership author. My question to you, sir, is about Vikasit Bharat 2047. It is estimated that we become 35 trillion market by 2047 and become top 3. According to you, sir, what are the legacy drivers that you are looking at who could contribute to become such an economy? That's number one. And are you also looking at the new anchoring points so that we can actually double down each year so that we can reach the 35 trillion mark from what we are currently at 3.9? Your input, sir. Thank you.
See, this is an agenda of government, and government is in able hands for it to be driven. For me to second guess what government is doing and telling that this is what is the thing that the government should do is not a right thing. What I can tell you is what we as BSC doing for the entire journey to 35 trillion plus as market cap. I touched briefly to you. We are building in physical infrastructure, technology infrastructure, technical infrastructure, human infrastructure. A change in any place is possible only with human capital. I may have 25,000 new ideas. If none of my employees are going to support me, if they were to tell me, fine, your ideas are all great, I'm not going to do it, I cannot do anything, right? So human capital is very important. And in all this, some amount of innovative spirit and feeling oneself as limitless is very important. So these are the qualities we are imbibing. We are looking at every day whether we can make doing business with BSC in any way easier. So we're looking at, apart from infrastructure generation, advocacy efforts. If we meet people and if we get a feedback that this is coming in the way, we immediately collect that feedback and go and talk to the people whom we regularly meet, who are in policy making capabilities, to look at it and consider whether they would like to make a change. They have better and bigger perspective. We are very small. So we come and give them ideas what we heard. In the larger scheme of things, our ideas may be good, ideas may be bad. While taking it to them is an assurance, result is in their hand because they have bigger perspective. That is another important area that we do. And approach. We are ready to spread ourselves as thin as we could across multiple jurisdictions to collect feedback, views, and market India, which is exactly what I am doing now.
Thank you, sir. I'm certain I can see a lot of questions in your eyes. Kindly keep them for a one-on-one with Mr. Ramamurthy afterwards, within his time availability, or as he has been mentioning in all the events today, write an email. Mr. Anand Seturaman, who's accompanied him, will ensure your question gets to Mr. Ramamurthy. Right? With that, thank you again, sir, and thank you for all your questions. One of the key ingredients of literacy is curiosity, and that's been demonstrated in ample measure. May I now have a pleasant privilege of inviting our chairman, Mr. Siddharth Balachandran, to the stage, along with Mr. Satish Sivan and our Vice Chairman, Mr. Sunil Sinha, to felicitate Mr. Ramamurthy. Mr. Anand Seturaman is the Head of Investor Relations at the BSE. Thank you, gentlemen. Please stay on. I have another pleasant task to perform. May I now invite IBPC Governor, Mr. Ramesh Ramakrishnan. Do we have any other governors at stage? No. Mr. Sahitya Chaturvedi, our Secretary General, and our conveners. I can see Mr. Karthik Raman here, Mr. Aftab, conveners, co-conveners. Please come over. Dr. Nilay Ranjan, and the team that put together this event from IBPC's side, starting with Mr. Krishnan Ramchandran, Ms. Prima Mahajan, Mr. Suresh Kumar, please honor the stage participants. Our Chairman Emeritus, Mahesh Ram, Amitabh Banerjee, This is the team, Mr. Rajan. He's been instrumental in coordinating so much of the details of the event. I think we're all assembled now. Thank you all. I have one last task to perform. Please stay on.
Wow, what a gathering. This is truly unbelievable. A very good evening to all of you. Namaskar to all of you. What an inspiring evening it's been. On behalf of IBPC Dubai, it's my pleasure to say a heartfelt thank you to all of you being present here, especially to members of 10 organizations and communities representing India and their wonderful spouses who add so much of warmth to our gathering. Thank you so much for being here. We are truly grateful to you. A special thanks to you, Mr. Sundaraman Ramurthy, MD and CEO of BSC. Sir, your presence today and throughout the day today, why I say this, has been nothing but exceptional. From the early morning institutional session at DIFC to another one at Grand Hyatt and now this grand finale, you have inspired every room you walked into. Thank you very much. We saw not just a market leader, but a thought leader. Thank you very much. You spoke not just about capital market, but also about trust, innovation, and the future we can shape together. We will always remember India is not a banana boat. It's a big ship. It has strength, it has resilience. We will also remember picture abhi baki hai, and we will wait for that. No wonder we noted that your journey is truly inspiring, from visiting the Madras Stock Exchange as a student to transforming the 150-year-old BSC into one of the finest exchanges of the world within 2 years' time. That's truly commendable. Thank you very much. You have made it a moment of connection for India and UAE, for investors and institutions, and also for families like ours who want to understand what this future holds. And one last thing, sir, you mentioned about family offices. IBPC has taken a very focused initiative under our chairman emeritus, Mr. Suresh Kumar, regarding this family offices, and we hope that you will hear more about it. We also express our deepest gratitude to our dear friend, His Excellency Mr. Satish Sivan, our Consul General of India. Sir, your support to Indian diaspora, Indian institutions, and especially to IBPC Dubai makes all the difference. Thank you very much. Thank you for always encouraging and being present in the initiatives that bring India and UAE closer. To Siddharth, IBPC chairman and a very dear friend, thank you for leading from the front. Thank you for bringing such a luminary to amongst ourselves and have such a great discussion. And finally, a big thank you to the IBPC team led by Ramesh and all volunteers behind the scene. You have made this day, not just this evening, seamless, thoughtful and welcoming. Let's keep the conversation going over dinner. Thank you once again and a very good night.
Thank you, sir. And with that, we conclude the formal part of the evening. Dinner is served. You may continue to have conversations over dinner with your peers and our distinguished guests. Thank you.